Welcome to the new weekly outlook. We have a ton of fundamentals that we need to cover today before we move on to the technical side. So this week, we're entering a critical stretch in September. This week is going to be dominated by US inflation data with PPI on Wednesday and CPI on Thursday, alongside the ECB's policy decision on Thursday, which kicks off a wave of central bank meetings going into next week, including the Fed and Bank of Japan. So let's start off with some of the macro fundamentals, starting off with central banks, of course. The Fed is currently in blackout mode ahead of their meeting next week. The markets are fully pricing in a 25 basis point cut, with futures still showing room for 2 or even 3 rate cuts this year. But the depth of that easing path depends on CPI this week. If inflation surprises hot, the Fed may need to slow down, which means that we're looking at 1 or even maybe 2 rate cuts by the end of the year. If CPI cools down, then they'll be free to cut more aggressively, so we're looking at 2 or even 3 by the end of the year. The bond market has already rallied sharply with 2- and 10-year yields at the lowest since April, showing that traders are positioned for easing. This week's spotlight is going to be on ECB. They meet on Thursday, and they're expected to hold rates steady, but the real focus is going to be on Lagarde's press conference. France's political crisis is adding stress to the European debt markets, which means that Lagarde may need to signal readiness to step in if spreads widen, even as inflation hasn't fully rolled over. This ECB meeting sets the tone for how Europe manages political risk colliding with monetary policy. In Japan, Prime Minister Ishiba's resignation sets up a leadership race, and the front runner currently favors more fiscal stimulus and a cautious BOJ. The markets are pricing that in already, as they're expecting that the long end of the Japanese government bond yields are going to rise, and the yen will weaken, and the political uncertainty to keep the BOJ on hold. Last week, we had NFP, so a ton of employment data, and now that the August job reports are behind us, the revisions are going to land on Tuesday, and those could show that the labor market was weaker months ago than we initially thought. This week, inflation is going to be front and center, with PPI on Wednesday, which is going to give us a look at the producer cost, and then CPI on Thursday. And we're expecting that the core CPI is going to increase at a pace of 0.3% month over month, keeping the annual around 3.1%. Like I said before, if CPI comes in hot, the markets will have to dial back their rate cut bets. If it's cooler, we may see yields sink further and risk assets rally like US 30, NAS 100, S&P 500. The Eurozone inflation ticked slightly higher last month. The ECB is cautious because the services inflation is sticky, but political instability in France adds another layer. If the bond spreads widen, the monetary policy could become a financial stability tool as much as an inflation tool. When we're looking at Asia, China is sliding further into deflation as the consumer prices remain negative year over year. The factory gate prices continue to fall for almost 3 years straight now, and that highlights the weak demand globally and keeps pressure on commodities and Asian exports. When we're looking at Japan, Japan's inflation outlook now ties directly to political leadership after Ishiba's resignation. When we're looking at politics and geopolitics, starting off with the United States and a little bit of tariff news, Trump has reshuffled the tariffs, exempting gold, uranium, and a couple of other mineral resources. That supports the metals and the gold prices push that we have been seeing recently, but shifts the inflation mix. On the Fed side, Trump's push to replace Powell next year with Hassett, Waller, or Warsh as finalists is keeping the Fed's independence in focus for investors. That political risk is part of why long-term yields remain sticky. And then when we're looking at Europe, particularly France and UK, France is currently in crisis, with Barrow likely loses his confidence vote on Monday. Fitch reviews France on Friday, and the budget deficit remains unresolved. The French bond spreads over Germany are near multi-year highs. And then when we're looking at the UK, the Prime Minister, his cabinet reshuffle focuses on growth and immigration, but political instability remains with the UK's Reform Party gaining momentum. Japan's political vacuum adds volatility to the yen and bonds. In the Middle East, Trump has given Hamas a so-called last warning as Israel prepares a larger offensive. That creates a headline risk for oil markets alongside OPEC supply moves, so we're going to be following a lot of these fundamentals throughout the week. So for a quick recap, when we're looking at the economic data, which we're going to follow here on Forex Factory, this week the catalyst is going to be the Tuesday BLS benchmark jobs revision with the business optimism that's going to be coming out. Then we continue down on to Thursday, where we have the CPI or the PPI and the core PPI coming out, and then continue down from there. On Thursday, we have the interest rates coming out from the Eurozone, and then we have the CPI data coming out from the US along with the unemployment claims. Then you have the ECB press conference. Like I said, if you're trading the euro, you definitely want to pay attention to that. And then for any GBP pairs that you may be trading, Thursday, pre-London session, you got GDP data coming out. And Friday, we end off with the consumer sentiment and inflation expectations. So a ton happening on a fundamental front. And now let's go ahead and move over to the technical side. All right, so starting off now with US 30, we're going to take a look at the quarterly time frame real quick. As we can see, it's a massive bullish momentum, and then last quarter in April, we grabbed that liquidity from down here, a massive rejection back down into the 36,000, almost 500 level, and then rejection to pull back up. So there is the room to continue rallying up, and a lot of that happened, this quarter because of the rate cut bets that the market has been pricing in. So everything that I just covered on the fundamental side. As long as we get the rate cuts, we're expecting a continued bullish momentum, but we do need to understand that from a technical side, price is still tapping into those previous resistance areas as bottom wick rejections last week at the start of this month already. And so we're looking for a strong support formation here on the monthly, weekly, and daily timeframes before a continuation back up. So when we're looking at the weekly time frame, we have, of course, that bullish momentum that we just talked about from April, which is that last quarter, and then a continuation back up last week. We got that bottom wick rejection down here. And I'm actually going to make that 45,000 flat. So we got the rejection here. We saw that the last couple of weeks price exhausted out at these new all-time highs, which is sitting around 45,000, let's just say 700, which is these top wick rejections. So for those swing trade opportunities, what we really need is price to establish a support here and then keep pushing back up bullish. And that comes from, again, the expectations of potential rate cuts. And we are going to be following the CPI and the PPI data this week, along with the consumer sentiment, to really understand if the Fed is in a good position for those 2 to 3 rate cuts by the end of the year, or are we really looking at more of a conservative approach of just 1 to 2 rate cuts? Then we come on to the daily time frame. On the daily time frame, we're just consolidating out here, right? So this is where we need to be extra careful before looking for any sort of day trades or even scalps and try and turn them into swing trade opportunities, because that can't happen unless these higher time frame levels are broken. But we can definitely take advantage of shorter term trades. So if you're looking for scalps or even day trades, that can absolutely happen in this big range from 45,700 down to 45,000, which is a 700 point range here. So for that, we're going to drop down to the 4-hour time frame, and we're going to narrow in our specific consolidation area. So we make sure that we're not taking a trade inside of them, but rather as soon as price rejects either of those levels. So the first one here is going to be right here, which is that previous support that you see me marking off from these levels. And then on the 4-hour time frame, that's exactly where we're holding on to support. So if the next 4-hour candle can give us a bottom wick and then push back up bullish, that's a pretty good opportunity for almost 300 points that we're looking at, because price is currently sitting at 45,000, almost 400. So if price can push back up bullish after making a bottom wick rejection, we're looking at potentially a 300 point move to come back and reject into that 45,700. As you can see here, price has rejected here multiple times, right? So that's why it's a very strong level. And we're looking for price to push back up. As it does, we understand that this is going to be the limitation of our trade. So this is really just the range that we're looking at to trade. We're looking for US 30 buy opportunities. If that doesn't happen and we're looking for sell opportunities, then we're waiting for price to make a top wick right here and then push back down bearish, hold on to a resistance in this zone, and then come back to revisit closer to that 45,000 mark. Either way, we got 300 point move to the upside, or we have a 400 point move coming back to the downside. Come down to the hourly time frame. So you got that massive sell-off on Friday that happened with NFP data. Price pushed back down here, held onto a support, and as you will notice to the left, we had consolidation here. So that's exactly where price came back down to, corrected that massive push up after price broke out of that consolidation. We had that massive bullish momentum, tapping into 45,700. And then with NFP data, we came back down and we held onto a support here and then trying to push back up bullish, but really just revisiting these previous consolidation areas here. So this is why it's very important to wait for proper support or resistance formations prior to looking for an entry. Then we're going to come over to GBP USD, start off with the higher timeframes here once again, just to understand what is the structure like and what kind of market sentiment that we're looking at. So even here, with GBP data, with the UK data that's coming out and the fundamentals, it's very important to understand how all of that plays out on the higher timeframes and then the type of opportunities that you see based off of lower timeframes. So for both of these pairs, there's obviously the fundamentals that we just went over, but then again, next week, you have the interest rates coming out. So we're going to expect bigger movements then as well. But this week is going to be a lot more of the market sentiment leading into potentially, can we see 2-3 rate cuts for the US dollar? And then what's going to happen on the UK side, which we will cover in the next weekly outlook to prepare you guys for next week too. When we're looking at the quarterly time frame, we have the highs, price pushes back down, a lot of consolidation, another push back down, some more consolidation, push back down, and then here we held on to an all-time low support, pushes back up, and we are re-entering into this consolidation area here based off of the quarterly time frame. So that tells us that whenever price does break out of it, we're expecting a lot more volume like we have seen in the past. And those are going to be for your swing trade and position trade opportunities. When you come onto the monthly time frame, we held on to those all-time low support, price pushed back up and then continues to make those higher highs and higher lows. And it seems like we're trying to come back and revisit into a previous high up here, but obviously you need the fundamentals for that. The type of fundamentals that we're looking for is a stronger pound versus the dollar or a weaker dollar against the pound. So we need fundamentals that are going to strengthen the pound, or we need fundamentals that will ultimately weaken the US dollar. And then we're looking at more of the capital outflows from the US dollar into riskier assets. And so we need better fundamentals that aren't creating so much of a market fear. Let's drop down to the weekly time frame. On the weekly time frame, we start to see a bit more of a consolidation formation within this area here specifically. So we're looking at this entire area right here. And you can see very specifically within that price is sitting into this consolidation. So we're looking for a break really above this for a continued up bullish trade opportunity to the upside when we're looking for swing trades, or sells below this bottom wick rejection and a continuation down. And when that happens, the first target is going to be here and then further down. So let's map out the clear levels for this week and then even potentially going into next week. This is a top wick rejection that the last weekly candle formed right here. And then I'm just going to do a 1.35. 1.355, sorry about that. 1.355. And then I'm going to mark off these candle body closures right here, which is going to be the 1.345. And that's my range for this week when I'm looking for a trade. When I come on to the daily time frame, I see that consolidation a lot more clearly. So what I'm really looking for is a zone-to-zone trade opportunity here. What I'm going to drop down to the 4-hour time frame. This week, the candle already started forming, but we know that the London session or the US session, they're not open yet. This is all the reaction based off of the Asian session and then the Asian session news. For example, Japan's Ishiba stepping down. So that's why we have a pushback down here, a gap that's happening as the market is starting to price in all those fundamentals. So based off of the 4-hour time frame, the first level that I'm going to mark off will be the support level right here. And that is the support of all these candles here, right? Because right below that, I see clear volume. But then as soon as price comes back and taps into this area, we start to see a little bit of a chopper volume unless price can hold on to a support, establishes a support, and then it continues back up. And then if I zoom out here, or even go onto the daily time frame, that's exactly that daily consolidation support right here. So what I'm really looking for is on the 4-hour time frame, we got that rally up, we got that rejection into 1.355 and then push back down. So I'm looking for sell opportunities after price fills in that gap with the top wick and then pushes back down. Those sells are going to happen below the zone. If that doesn't happen, then I'm waiting for an established support, something like this, and then a continued push back up. Drop down to the 1-hour time frame. After price tapped into those previous highs from higher time frames, it started to consolidate out, and then we start to see a little bit of more volume kicking in, again, NFP driven. And then after that, we just stalled out right here. We didn't really break these previous lows here just yet. So I'm looking for a bit of a top wick and then a continuation back down for any sell opportunities below that zone. Sells are not valid unless price can break below this zone here. For any buy opportunities, you want to establish support, correct a little bit more, tap into this area, and then push back up. As that happens, those are my buy opportunities. Euro USD is quite similar to GBP USD, but we will still mark that off. Same thing here, price consolidates, you get a push, it consolidates, you get another push, taps into those all-time lows, pushes back up, consolidation, we get a nice little rally up, and now we're approaching these previous higher time frame levels that we need to be extra careful of. So in this case, even if I mark it off right here, you see to the left how this is a very important level and price keeps rejecting it. Same thing here, you had a break in retest right here on a quarterly time frame before that massive sell-off here. So 1.18, and we will adjust this as we drop down to lower time frames. I come onto the monthly time frame, same thing here, established those all-time lows, consolidated, gave me a bit more of a retest and then a nice rally up to the upside, and that happened earlier this year in February. And then here we stalled out at 1.18 and then just holding on to a resistance here. Come down onto the weekly time frame, same thing, that's that resistance. And on the weekly time frame, we're currently sitting in consolidation here too. So I'll just call that 1.16. And that's my range for this week. So here, unlike other pairs, I can actually just map out a zone because I see a very clear daily resistance formation right here that price just ranges in the zone. So if I don't get that continued buy opportunity with a support formation here and then push back up, then I'm looking for sells to come back down into the zone. But within this consolidation, you can see how price attempts to break its own high, and it's maintaining this very subtle bullish opportunity or this bullish structure to the upside. So that tells us that we're looking for a lot more bullish opportunities for the longer term trade. And same thing here as GBP USD. From a fundamental perspective, you need fundamentals that will strengthen the euro, or you need fundamentals that will strengthen or weaken the US dollar for that bullish momentum. For any sells, then you need fundamentals that will weaken the euro or strengthen the US dollar. Come on to the 4-hour time frame. We broke above that zone and then fake out, came back down. Same thing here, a quick fake out. And then the last 4-hour candle closed bearish right into the zone. This current one also gapped down like it did with GBP USD. Same thing, looking for a top wick, wait for it to break below the zone. As that happens, I'm looking for sell opportunities to come back down and first target being somewhere around here. So right into this consolidation area, that way it still holds on to this bullish structure to the upside. If it dips down a bit lower, then the next target is going to be right into the support area, closer to 1.16, almost 200. And then if we have really the fundamentals to drive it all the way down to 1.16. But the more important thing is just making a top wick and then pushing back down and correcting this bullish momentum, holding on to a support, and then look for those longer term buy opportunities after price bounces off a year. If we're looking for buys here, and then even on the short term, if you're looking for scalps or day trades, then you want a support formation here for sure, and then look for your buy opportunity. So don't look for a trade within the zone here unless price can close above this and then the next candle continues up. So then you're not stuck in a fake out like these previous candles here to the left. GBP USD, as you can see, a massive gap up. So quarterly time frame, push all the way down. It has already established an all-time low here. We got a nice rally up here. And then this is really when Brexit and all that started. So we got another push back down. We saw a lot more strength in the yen against the pound. We held on to a support here for a very long time until 2020. And then when Brexit was finally resolved after a couple of years, you got to see that rally up. Now we have broken those previous all-time high levels in the last couple of quarters in 2024, last year. And now we're holding on to a support right at that level. So that's a pretty good indication of the pound strength against the yen. And then that, of course, the gap up that we saw came from the fact that it is Japan's fundamentals that the market is pricing in, with Japan's prime minister stepping down. So of course, we saw a little bit more strength in the pound against the yen here. When you come onto the monthly time frame, that's your core consolidation right here. So what I'm going to do is adjust this to sit right at that resistance, which is going to be support for the current monthly candle. You can do 197.9 or you can do 198 flat, either of that, as long as price is holding onto a support here. Come onto the weekly time frame, you see that 198. That is the level where price rejected and then push back down, fake out, push back down. We come back, tap into that area, and even though we have a break and retest, we really fail to continue breaking these previous highs. So when we're looking at the weekly time frame, what I'm watching out for is if price can break this top wick rejection right here. And that is the 200.3. If that happens, then I'm looking for those continued swing trade buy opportunities to the upside to really come back and target into 206 area. Other than that, this week, this is my range that I'm looking at. When I come onto the daily time frame, price was sitting in this massive consolidation, which obviously because of the fundamentals, it has finally broke past. And then that's a massive gap that the market has yet to fill in. And it's always going to fill in those gaps, whether it's wick rejections, like you see here to the left, or it's actual candle closures, you're always going to see gaps being filled here. So now this is a matter of more of a zone to zone trade. If price can hold on to a resistance here and then push back down, we're waiting for it to break its own daily low here, which has already kind of created. So if it does that, then we're looking for a gap fill trade to come back down from almost 50 pips or so. And then after that, this is going to be the decision point of if you want to hold on to your sell opportunity. You see that price breaks completely below this resistance. It doesn't have the fundamentals to really support a bullish opportunity for a pound against the yen. Then we're looking for those continued sells to come back down into that previous support from higher time frames of 198. If that happens, you have a potentially 200-point move on your hands right here. If price holds onto a support here and then pushes back up, then we're looking for another zone to zone trade right here in the middle. Come onto the 4-hour time frame. This is where the previous 4-hour candle closed. And then here's the new one where it's opening up a little bit of a top wick. So we're looking for those sell opportunities to come back down here. It really needs to fill in this gap all the way down here. So we have a pretty good range that we're looking at in this Asian session. And then, of course, like I said, establish a support somewhere here and then continue pushing back up for those buy opportunities. USDJPY, pretty similar setup. You look at higher time frames, starting off with quarterly, you saw a lot more strength in the US dollar compared to the yen. And then we saw a massive rally up, and now we start to stall out as we tap into these new highs for the last couple of quarters since almost 2 years ago, 2023. You come onto the monthly time frame and you have your core support right into this area here, right? So after price broke above that, you see this consolidation formation right here. What I'm going to do is actually adjust this so it sits under the current monthly candle, because we really need to narrow in into levels that need to be broken right now in order for us to look for any buy or sell opportunities. The higher the time frame, the longer these trades are going to take to play out. So of course, monthly, quarterly, weekly, daily, these are all going to be swing trade opportunities, even position trade opportunities. But these are very important levels to still mark off, because the higher the time frame, the stronger these levels are going to be. So we're not really expecting price to break monthly resistance and support based off of a 5-minute time frame. When we're looking at the weekly time frame, you see a push up and then a slowdown in that volume. You really start to see a bit more of a consolidation formation right here. So what I'm going to do is adjust this right here, and then we'll create let's just create a new line. So anything below that is that core daily consolidation area, right? So after it corrected very slowly, you see it establish support and then push back up. And that's what happened on the weekly time frame, where you see that weekly consolidation. And then when you drop down to the daily, you see daily consolidation. But on the weekly time frame, you see a lot more cleaner support formation and then push back up. We're going to come onto the daily time frame, and that's that core daily consolidation right here too. And that's going to be 148. So if we're looking for sells, then we need 148 to be broken. That way we come back down and tap into 146.8. That is a 117-point move that we're looking at. If price, obviously it has to drop back down because that's where the previous daily candle closed, and that's a massive gap up. So again, gaps are always going to have to be filled. In either way, this is a zone That is going to be the determining factor of how long we hold out this trade for. After that gap fill, either we could see a support formation and then push back up. As that happens, first target being 148 and then a continuation up from there closer to 149.2. So either way, you're looking for sells as price pushes back down further. So this is going to be the first trade that we're looking at for a gap fill. And the price either holds on to a support and then pushes back up, with that being the first target and then a continuation back up, or price taps into this area, fills in the gap. We don't have enough fundamentals for the US dollar to gain more strength against the yen. So then we see a further pushback down and price simply just holding on to support like it has been here for the last couple of weeks, couple of months as well. Onto the 4-hour time frame. 4-hour closed bullish here on Friday, massive gap up. As you will see to the left, we're kind of rejecting this area. So again, those sell opportunities, we're looking for cleaner sell opportunities, more confirmed sell opportunities below 148. So you can catch it right now if you'd like to, but the more confirmed and safer ones are going to be below this. So then you see a pushback down into the support. Then finally, gold. And we also went over the fundamentals for gold as it's tapping into these new all-time highs. And a lot of that comes from the fact that we're looking at the interest rate bets. We have inflation that is still in play. You have a lot of political instability on a global scale with France, with the US, tariff, trade wars, everything like that. So on a weekly time frame, what I'm going to do is mark off this weekly candle's top wick rejection. I think that's fine. Drop down to the daily. Daily made a little bit of break and retest, but I'm going to mark off this support area. And that's going to be my range for this week. If price can break below this, then we're looking for sell opportunities to come back down into these areas down here, which in this case is going to be 3442.7. That's only if price can break below that 3545.8. As the political instability and more market fear continues to grow within the market, you're going to see the gold just keep pushing, and you're going to see yen pushing as well, and the US dollar. So it's very important to really understand the fundamentals and the type of market sentiment that they're setting up. When we're looking at the 4-hour time frame, this is how the 4-hour candle on Friday closed. So we had a bit of a rejection here, and the 4-hour candle closed at the bottom of its range, no bottom wick whatsoever. So for sell opportunities here, we need a bit of a top wick and push back down. But of course, we already saw that the fundamentals over the weekend were creating a lot more political instability, especially with Japan and all the CPI data that's coming out, the PPI, interest rate, all that stuff. So very strong possibility that price pushes back down slightly, simply to tap into this area and then pushes back up bullish. So either way, buy opportunities, we're looking for any buys above 3,600. That is obviously going to be new all-time high levels, but we're going to be targeting that with 1-to-1 and then 2-to-1, 3-to-1, and really have a more conservative risk management approach to that. For any sell opportunities based off of the 1-hour time frame, we've already rejected into that 3,600, 36,780 area, holding onto a resistance. So looking for those sell opportunities to come back down as price continues to break its own low, targeting this area first, and then that's your TP1 area. And if price continues pushing back down further, then we're targeting that 3545.8. So that's pretty much it for this week. As always, make sure that you guys are very careful with your risk management. This week is all about inflation data in the US and the ECB's rate decision in Europe. The Fed is on deck next week with Bank of Japan as well. But how aggressively they're going to cut the rates depends on CPI this week and what CPI tells us on Thursday. So make sure that you always pair these fundamentals with your technical analysis, manage your risk very carefully, and don't chase every headline. So stay disciplined, stay patient, and I'll see you guys in the next update.